Big gain for Shopify today. The stock shooting up. Investors like the look of those latest quarterly results. We are joined by Bloomberg's Stephanie Hughes. Stephanie.
Yeah, you got it right, Andy. So Shopify shares were up as much as nearly 25% at its highest today, and that was the biggest intraday gain since May, and a complete 180 from the declines we saw yesterday as Shopify was caught up in the broader market rout there, and by far the biggest TSX top performer there. And this is another earnings story. Shopify's revenue came ahead of expectations at about $2.05 billion. And it was also adjusted earnings and gross profit exceeding analyst expectations. So it's pretty much an across-the-board beat there, Andy. The earnings also impressed analysts like TD's Daniel Chan, who said that these results demonstrated Shopify's ability to keep gaining market share even as we're seeing a mixed consumer spending environment. So after Shopify's 2021 rally, fueled by this pandemic-era e-commerce boom and low interest rates, the story kind of shifted on Shopify and became how does the company find sustainable growth and gain a foothold as rates were rising and shares saw some pressure there. So they made some tweaks to the strategy in recent years. Our own Bloomberg intelligence analyst noted that they've been able to really claw back that market share from rivals and showed some dominance in the digital commerce space. Another gainer I'm looking at today, Andy, is Suncor. Those shares were up as much as 7% today, most in nearly 2 years, so a meaningful upswing in Suncor. And there's a few factors working in Suncor's favor. First and foremost, it was a strong second quarter report with operating earnings of $1.27 per share, exceeding analyst expectations. Beyond that, it was also these robust oil sands production figures, and further to that, management said on the conference call today that it would be able to boost its oil sands production in the Alberta-based Firebag project by a range of 3,000 to 5,000 barrels a day, mostly because of modifications done on the project, including some valve work there. So viewers may recall that this Alberta-based Firebag project had to be evacuated just weeks ago because of the Jasper wildfires. And these workers have since returned to the job after that wildfire came back under control there. Finally, the analysts were also happy to hear that the company's turnaround efforts are moving ahead of the initial schedule that they plotted out there, looking to hit $8 billion in net debt earlier than initially projected. They were thinking initially that they would hit that target in the middle of next year. Now they're saying sometime even sooner than that. So all of these factors working in tandem prompted a few analyst upgrades and price target hikes and had traders flocking to Suncor and put it well into the best performers list on the TSX there today, Andy.
We were joined earlier by Randy Ollenberger of BMO, the analyst who one of the ones who upgraded Suncor. It's interesting, Stephanie, I was looking earlier at a 5-year chart for Suncor compared to XEG, which is the Energy Producers ETF. And you can really see how the stock struggled. It had some tragic deaths and operational slip-ups. The CEO was replaced, and the stock, a horrible stock to own, relatively speaking, over half a decade. But if you look at a 1-year chart for Suncor, you can see it has been roaring lately, so certainly recovering. An endorsement of Rich Kruger, the Imperial Oil boss who took over.
Absolutely, yeah. It looks like it's a turnaround story. That this turnaround story wasn't just for this quarter, but it was for the broader year there. And to the safety issues, I wasn't surprised to see that in the transcript, the conference call today. That seems like it's a priority for this new CEO, or this more recent CEO here, as he's really making some tweaks to the company's strategy. But yeah, it's been an interesting year for Suncor.
Stephanie, thank you very much indeed. Stephanie Hughes.